morning, students. Welcome back to the session on audit. So today we'll continue with our discussion on audit of NBFCs. Just a quick recap of whatever we have discussed in the previous session. First thing was about the NBFC, of course. That was about the definition of NBFC, or we can say the companies which get covered under NBFC. And wherein the most important aspect which we need to consider about the NBFC is the nature of their business, which has to be the financial activities, and which is tested in the form of a test which is generally called as 50-50 test, wherein we check whether 50% or more of the assets of the NBFC on the balance sheet are financial assets. And when we go to the P&L of that NBFC, then more than 50% of the revenue, or you can say the total income, should be in the form of income generated from these financial assets, which is nothing but the interest income. If both of these criteria are met, that means more than 50% assets are financial assets, more than 50% total income is the financial income, then such a company is considered to be an NBFC, irrespective of the fact whether that company is registered as NBFC or not. Okay, so that's the first thing which we need to understand. And I'm just reiterating that even if this company is not registered as NBFC, because of the nature of its business, this will always be considered as NBFC. And that's why it's important for such a company to make sure that it is complying with all the registration and other criteria also for an NBFC. The other aspect was about commencing the business. Now, if we understand that a company wants to commence the business of an NBFC, or if the company is already doing the business of an NBFC, then there are two most important requirements, and we can say these are the two prerequisites. First, to get registered, that means to get the certificate of registration, which is nothing but a license to run this business. And second is to have net on fund, which has to be at the minimum level of 2 crore INR. The other aspect was about various regulatory requirements. We understood, we discussed as to why NBFCs are highly regulated. This was because of the fact that significant public interest is involved in this, and that's why we have lots of rules and regulations which are driving various principles of NBFCs. And in respect of this, we understood various prudential norms. Talking about some of those prudential norms quickly. First prudential norm is about the income recognition criteria, of course, for an NBFC, wherein we understood that if the assets of the NBFC, that means we are talking about loans, advances, or some of these assets which are given in the normal course of business, which is nothing but the investments or kind of advances given to various customers for various purposes, that if such assets are good in nature, good means they are standard, then such an NBFC can continue to recognize income on an accrual basis. However, if any of these assets become bad in the form of non-performing assets, which could be because of any reason, the moment an asset becomes NPA, the income recognition criteria has to change from accrual basis to cash basis. Means we will recognize income only when it is received. We will not follow this accrual basis of accounting. And even if some income has already been recognized on an accrual basis, but that has not been realized so far, in such a case, we need to reverse that income. That means even if there is some income which has already been recognized, even in the past years, even if that's recognized in the past years, still that is required to be de-recognized by reversing that income. And then we discussed about various classification criteria for these types of assets, which were substandard, which were doubtful, and which were loss assets, other than those which are in the nature of performing and which are considered as standard assets. We also understood as to what are various criteria, what is the time frame over which an asset will become NPA or over which an asset will become say a doubtful asset or over which an asset will become loss asset. And we also understood that in respect of all of these assets, even in case of standard assets, some provisioning is required to be made. And that is because of the conservative principle, that is because of this prudence that is required to be followed to ensure that the NBFC has got sufficient funds, sufficient reserves in place in case some of these performing assets, they start becoming bad or some of these non-performing assets are not recovered at all. So now we will pick up some examples based on our discussion in respect of these NPA provisioning norms or these classification criteria also. But before that, quickly talking about some of the audit procedures over which we discussed certain audit procedures with the help of a checklist in respect of a particular NBFC, and we also discussed that NBFC is like any other entity. Of course, on the top of that, any other entity, there are certain peculiarities which are specific to NBFC, and that's why those peculiarities are also required to be dealt by the auditor. But as far as the audit approach is concerned, the overall audit approach which we apply in case of any entity has to be applied in case of NBFCs. Yeah. So considering all of these things, let's pick up some examples and we'll try to just recap some of these things that we have discussed with the help of this example. Just give me 1 minute. So I'll just move on to Word file. Say there's an NBFC which has been continuing its business for last 15 years. This company is into the business of NBFC or running as an NBFC for last 15 years. And over the period, there has been significant fluctuation in terms of the P&L of the company. That means in some of the years, NBFC has earned good profit. March 2022, its advances are approximately rupees 200 crore. Advances means the advances which are given. Sorry? Screen is not visible. Let me just check. Is it visible now? All right, sorry. So I'll just quickly repeat the facts. So I was talking about an NBFC which is around 15 years old, and in terms of its profitability, we discussed that the profitability is something which has remained volatile for an NBFC. And if we look at the balance sheet for NBFC in terms of its advances, so currently the advances as at 31st March 2022 stand at rupees 200 crore. So when I talk about advances, I am talking about the assets for an NBFC. So we are talking about assets. So don't think that these are the advances taken. These are the advances which are given. Now, if you look at the historical pattern for this NBFC, we can say that all the required ratios which any NBFC is required to maintain, these have been maintained by this particular NBFC also. So there's not been any significant change or there's not been any non-compliance except for the current year. That means if we talk about financial year 2021-22, we can say there were certain liquidity constraints. Okay, there were certain liquidity constraints in respect of this NBFC. Means this NBFC has struggled in terms of maintaining the required liquid assets or maintaining the required ratio, though that is yet to be analyzed because the financial year has just come to an end and the financial statements are also required to be drawn. But if you look at the financial position on the basis of the numbers which are available as of now, then we can definitely say that this period has been quite turbulent for this NBFC. Now, as regards these advances which I talk about, means amounting to rupees 200 crore, most of these advances, so I would say out of 200 crore, most of these advances, 110 crore, have been given by the NBFC to its related parties. So these are given to related parties. The related parties has the same meaning as we understand in case of accounting standards. Okay, or if you look at the meaning of Companies Act, so you can just apply the same meaning over here. And most of these related parties, I would say, are in the nature of companies. So these are all corporates who have availed loans from NBFCs, but they have been the related parties over here. And the remaining amount, that means remaining 90 crore has gone out to unrelated parties. Okay, now talking about the advances which are given to related parties. Advances which are given to related parties. There's no specific term which has been agreed between the NBFC and the related parties. When I talk about the term, means the repayment period, frequency of repayment, frequency of repayment means whether this repayment will be made on a monthly basis, quarterly basis, 6 monthly basis, annual basis. Repayment period means for what period this loan has been given by the NBFC to a related party. So both these periods are not clearly agreed in the agreement between these two parties. Means it appears as if there's no specified period. So we can presume either it could be a loan which is given to be repayable on demand, means as and when it is demanded by the NBFC, this will have to be repaid by the related party. And as regards the frequency of payment, because this is not specified, so that's why over the period, it's been observed that as and when related party wants or as and when the NBFC requires, it asks for the repayment from the related party. Okay, but clearly there is no pattern which is available as regards the frequency of repayment. But if you look at the interest, that has been charged at market rate. Interest is being charged from both the parties, the related parties as well as unrelated parties at the market rate. Okay, so even if the interest is not getting repaid, it's charged at the market rate. So that means it is getting accrued. It is getting accrued at the market rate of interest. Now, in such a scenario, considering this fact pattern, in case of related parties, we understand that there is some concern, or if there is no concern, then definitely a relationship is available through which this repayment, if at all this becomes a problem that we are going to analyze, can be taken care of by the NBFC. But this entire fact pattern was in respect of this 110 crore. Okay. Now, when we move on to the unrelated parties, when we talk about the unrelated parties, when we talk about unrelated parties, so in case of unrelated parties, there is a clear established pattern of payment. Means unrelated parties have to make the payment on monthly basis or quarterly basis. Okay, and it's a kind of EMI which they are required to pay. EMI means equated monthly installments, and kind of EMI I'm saying because it's not necessarily on a monthly basis, as we discussed, it's also on a quarterly basis. So that means there's a fixed pattern of repayment which is seen in case of loans given to unrelated parties. And generally, the loans which are given to unrelated parties are for a period of 1 to 3 years. Generally, this is the period which has been observed. Okay. And the interest which is charged from these unrelated parties is same rate. Same means it's the same rate of interest which the NBFC has been charging from the related parties. Means this one. It's the same rate of interest. Means both the rates of interest are same, depending on the period, of course. As and when the period changes, of course, there are certain changes which are seen in case of these rates of interest also. Okay, so this is the fact pattern which is available. Now, considering this fact pattern, management has considered that all the loans which are given to related parties are standard assets. Okay, management has considered that all the loans which are given to related parties are standard assets. So I would say loans to related parties, they are all standard. They are all standard assets, means these have not been considered as NPAs at all. Why? Because these are, you can say, repayable on demand, and there's been no default, because if you look at the terms and conditions of the agreement, there's no period which is specified for the related party to make the payment in respect of the loans which are given by NBFC to the related parties. Number one. Now, because these loans have been given to the related parties, and because these are considered as standard assets, okay, ideally there should be a provision on these standard assets, but NBFC has not created a provision. NBFC has not created a provision on any of these assets. Why? Because these are given to the related parties. And because of which NBFC has no doubt as regards their full repayment. Okay. Because these are given to the related parties, so that's why NBFC has no doubt as regards their full repayment. Fine. Now, moving on to the unrelated parties. So if we look at the fact pattern of unrelated parties, in case of unrelated parties, once again, what did we find? That the repayment and everything has been good. And that's why majority of the assets were good, and that's why they were also classified as standard assets. Okay. Some assets, I'm talking about majority of the assets. I'm not putting the numbers over here. We can just simply say out of 90 crores, majority are standard assets. Okay. And remaining assets have become NPA. Remaining assets have become NPA, but the NBFC has not considered the provision for these remaining assets. Okay, for these remaining assets, no provision as per directions. If you remember, there are certain directions of the RBI as far as creation of provision is concerned in respect of NBFCs. So even though the provision has been created by the NBFC for these NPAs, that provision has not been created as per the directions. Why? Because the NBFC believes that these assets represent only a small proportion of their total assets. A very small proportion. That's why it doesn't believe that for a small section of the total loans advances which it has given, it needs to get into that complexity of assessing the NPAs into doubtful or into loss assets or into substandard assets, and then create a provision considering the size of the company and also considering the volume of the assets which have been classified as NPAs. Okay, yeah. Now, you happen to be the auditor of this company, of this NBFC, and you are aware of this entire situation, and you can also understand that during the year there has been some liquidity constraint. The financial position of the NBFC seems to be good, but if you look at the financial performance of the NBFC during the year, it has not been very good. Okay, so the NBFC is not really making good profits. In fact, the numbers are negative. As an auditor of the company, this is something which you have seen on a prima facie basis when you start the audit, okay, on the basis of the draft financial statements which are available. Now, considering this situation, what will be your first thought, or what will be your course of action during the year, or what will be your conclusion in respect of some of these matters which we can see in respect of loans and advances which are given by the NBFC to its related parties or to its unrelated parties? So we can look at some options now. Okay, so let me just go to some options now. Option number A. Now, considering the fact that the loans are given to related parties and that represents the majority portion of the loan. So that's why whatever practice NBFC has considered so far in respect of its loan to its related parties means to consider them as good, not creating a provision seems to be appropriate. Okay, so I'm just saying in respect of the related parties, if whatever practice this NBFC has adopted, that seems to be all right. Okay, in respect of related parties, everything is all right. In relation to unrelated parties, NBFC has created a provision. NBFC has created a provision for the remaining assets, which is not as per the directions of RBI, but they have considered some basis, which again seems to be reasonable. The idea is to make the provision. Okay. If you look at the standard assets, which are in respect of unrelated parties, which represent the majority of the assets, therein some provision has to be made, which doesn't seem to have been made as of now. Okay, so that means provision should be there for standard assets, but in respect of other assets, whatever they have considered as of now seems to be all right, because the amount is not so significant. Okay. Yeah, amount is not so significant, so that's why whatever NBFC has done so far seems to be reasonable. This is something which the auditor will consider in terms of finalizing his position in respect of NBFC. Option number two. Option number two is again to go with the same thing. That means for related parties, everything is all right. And for unrelated parties, provision, whether it is in respect of standard assets or in respect of other assets, should be there as per the directions of RBI. As per the directions of RBI only. So no deviation should be there. Yeah, so it has to be completely as per the directions of RBI. If there is a gap, that is not allowed. Even if that's a small gap, it's not allowed. It has to be as per the directions only. So this is option number B. Let's go to option number C. So in case of option number C, we can say that the NBFC should create a provision for all the assets which it has. And in fact, the way the agreements have been drafted, the way the loans have been given, particularly to the related parties, is not in compliance with the requirements of RBI's directions. Yeah. So let's try to understand what are those known compliances. What are those known compliances? Let's understand now. In case of related parties, when we look at the period of repayment, when we look at the timing of repayment, as per the directions of the RBI, these have to be clearly laid out. If these are missing, that means it's clearly a violation. There has to be a clear repayment period. Otherwise, what do we assume? If no pre-repayment has been made, then the then the assumption which will immediately come to our mind will be that the other party, means the customer or the party which is the borrower, that has not been making the repayment. In which case, all of these loans which are given to the related parties will become NPAs. And because they will become NPAs, that's why they will also have to be classified on the basis of the classification criteria. Means they will also have to be considered as if they will become substandard assets or the doubtful assets or the loss assets. We can't just simply go by the current practice of just keeping those assets like any other assets. Okay, yeah, so this is one. So which means there is a non-compliance which the NBFC needs to regularize immediately. And of course, auditor also needs to report this matter. But irrespective of all of these reporting requirements, which are in respect of compliances, the provisioning in respect of the loans which are given to the related parties has to be made in the financial statements. So that means they will all become NPAs, which will require provision to be made. Based on the classification criteria, which will also be necessary over here. And as regards the unrelated parties, there again, we can't just simply say that only a small proportion is something which has become NPA. So even if it's a small proportion, this has to be considered as NPA and this has to run through the classification criteria, which we see in case of any other NBFC, and for which the provisioning should also be made as per the directions of the RBI. This cannot be at the wish of the company. Okay, so the company cannot just simply say that they have created adequate provision. So till the time this comparison is made, that what is the adequate provision which the company has made and what is the provision which the company should have made as per the directions of RBI, and only when this is compared and found to be immaterial, auditor can consider that aspect. But this working will have to be done by the management. Okay, management just simply can't say that this is immaterial or this is insignificant. That's why we have ignored. Management will have to produce those workings to substantiate that the amount is insignificant, over which auditor will take a conclusion whether that is really considered to be insignificant or not. Okay, so that means here again the classification criteria has to be followed appropriately. Needs to be followed, and the provisioning should be made as per that classification criteria. All right, yeah. So this is option number C. Now, moving on to option number D. So let's understand what can we have in respect of option number D. In respect of option number D, for the related parties wherein the loans have been given and for which the period etc. are missing, therein the company can simply treat them as good assets. There's no doubt, because the NBFC is very sure that it will recover full money. Yeah, there's no thought of the money getting not recovered. Okay, so that means to consider this amount as bad will not be appropriate on the part of the NBFC. But the NBFC should make a provision for the good assets. That means we can call this entire amount as the one which is represented by the performing assets, means the one which is considered as standard assets. But even in that case, the NBFC needs to go as per the provisioning criteria. That means provision has to be made. Yeah, that 0.25 or 0.5% or 0.4%, depending on the type of NBFC it is. As of now, we don't know which type of NBFC it is. Yeah, so that means for the related parties, all of these assets can be considered as standard assets, wherein the provision can be made. And that provision has to be the one which will apply in case of standard assets. But yes, for sure, we should not consider these assets as NPAs, otherwise it will lead to unnecessarily creating a provision, or we can say overbooking of provision in the financial statements of NBFC. And this is also considering the fact that the NBFC is something which is facing a problem as of now in terms of its financial statements. Okay, I think there's some screen problem. Let me just share it once again. I'm just hoping that the screen is now clear. Okay, so we were talking about option number D. We are saying that for the related parties, the standard assets should be considered and for which the provision should be made appropriately, but the provision should be only in respect of the standard assets. It should not be by considering all of these assets as NPAs. Okay, something which we did in case of option number C. And for the unrelated parties, means for the loans which are given to unrelated parties, therein we will say the point which we discussed in case of option number B will continue, that all the loans which are given to unrelated parties, they have to go as per the classification requirement of the directions of RBI. They should be considered on the basis of classification criteria as per RBI's directions. Okay. And while considering the directions of the RBI, we should not think that what amount of the assets is standard and what amount of the assets is substandard or doubtful or loss. We should do this classification assessment for all, create a provision based on this classification assessment for all, and after doing that, if some adjustment entry is missing, that can be considered by the auditor on materiality basis. But the management should not say that the entire amount of the asset category is insignificant, and that's why they will not go for creation of provision as per the directions of RBI. That will not be considered to be here. Okay, yeah. So these are the options which we can think of in the current situation. So let's try to analyze all of these one by one. And I would request all of you to just evaluate all these four options and let me know what are your thoughts. Which option out of these you will consider to be the most appropriate in the given scenario. I'm just hoping that you are clear on the fact pattern. It's a big fact pattern that we have discussed. I'll just quickly summarize. NBFC has given loan to two types of customers. One is related, second is unrelated. For related, we discussed that the loans have not really been classified because the terms of the terms on the basis of which the loans have been given are not very clearly available. Those are vague terms. That's why we don't see any provision in the financial statements of NBFC. But the amount is quite significant in respect of these advances which are given to the related parties. That means it is more than 50% of the total loans advances. Okay. And for the other category of customers, which is unrelated, provision has been made, but the provision has not really been made as per the directions of the RBI. So in the given situations, in the given scenario, we have considered 4 options, and I would request all of you to evaluate all of these 4 options one by one and let me know which option you believe will be the most appropriate one. Yes, over to you. And I'll also move on to all of these options one by one. I'll just analyze all of these options one by one. Okay, yeah. So option number 1, wherein we are considering that whatever this NBFC has done in respect of its related parties seems to be appropriate. Yeah, something which we have considered not only in case of option number A but also in case of option number B. Now let's try to think about it. Not creating any provision, not putting the terms and conditions in respect of repayment, not defining the repayment period. Even though interest is getting charged, money is not coming back to the NBFC. Is this really in line with the requirements of the directions of the RBI? The answer is no. Just by keeping its terms silent, or you can say vague, in respect of its contracts with the customers, whether it is with unrelated party or related party, cannot be considered to be a compliance of the norms which the RBI requires. So therefore, definitely we cannot say that the terms with which loans have been given to the related parties are appropriate. They seem to be a violation of the requirements of the RBI's directions. So that means we can definitely say that option number A, that means we can say that option number A and option number B therefore cannot be considered to be the right option. These 2 options go off. Yeah. So now moving on to option number C. Option number C requires, once again, evaluation of each and every loan which is given to a related party as well as to unrelated party, checking whether it will become standard, substandard, loss or doubtful asset, and on the basis of which provision should be made. This is something which option number C requires. That means option number C disregards the fact that the loan has been given to a related party. Irrespective of the fact that the loan has been given to a related party, option number C requires provision to be made, classification to be assessed. And option number C also considers the fact that if the terms of the agreement with the related parties is vague, that is also a non-compliance which the auditor needs to address, auditor needs to take care, and the management also needs to take care and regularize immediately. Yeah. So that means if you look at option number C, whether we consider the requirement of loans given to related parties or the requirements of loans given to unrelated parties, both of them seem to be appropriate. So I would say something which option number C requires seems to be in line with whatever we have discussed so far. Yeah. But at the same time, we also need to evaluate, we also need to understand option number D, because we are not really looking at the correct answer. We are looking at the most appropriate option out of these. Okay. Now, in relation to option number D, what do we find? That the requirements for unrelated parties, which option number C requires, is same in case of option number D. Means the only difference in the treatment is in respect of loans given to related parties. Option number D requires that all the loans which have been given to the related parties can be considered to be a good asset. and therefore they can be classified as standard assets, which I won't say is the appropriate assessment. Why? Because we cannot say that if the loan is given to a related party, so that's why it cannot become NPA. Is there any such requirement of the RBI? Is there any such direction of the RBI? Or is there any exception which is available under the law for not considering a loan given to a related party as an NPA? The answer is no. So that's why, can we just really go by an assumption that it's a loan given to a related party and that's why it can be treated as standard asset? The answer is no. This is not an exception. There is no such exception which is available. So that's why, what do we understand over here? We need to be just very, very clear about this aspect, that because there is no exception for a related party or for any other party, that's why each and every type of loan which the NBFC gives has to meet the requirements of the classification criteria, those prudential norms, as we have discussed in the discussion related to various types of assets which are available. Okay, so because of which option number D will also not be considered as the right option. So that's why, what do we say out of these options, which is the most appropriate one and which is the only correct option? Option number C. Clear on this? Yeah. So any questions, any doubts, in case you have, you can just put across your query and we can have a discussion on that aspect as well. All right, so I'll now move back to the presentation. Just give me 1 minute. Okay, so now we will continue with our discussion in respect of the prudential norms and continuing with some of those requirements related to the prudential norms. NBFCs are required to classify the types of frauds into the categories which is available. Let's understand this. Frauds have been classified as under based mainly on provisions of Indian Penal Code. This is how frauds have been classified in respect of NBFCs also. So let's understand what could be the categories of frauds. First, misappropriation and criminal breach of trust, fraudulent encashment through forged instrument, manipulation of books of accounts. Forged instrument means, so for example, if we talk about a loan which is given, so the documents of the loan are not the correct one, they are forged one, on the basis of which loans have been given. Manipulation of books of accounts, so something which has been shown in the books of accounts as say rupees 100, but actually it represents only rupees 90. Unauthorized credit facilities extended for reward or for illegal gratification. Negligence, cash shortages, cheating, forgery, irregularities in foreign exchange transactions. Foreign exchange transactions means those transactions which are in respect of transactions which are carried out in currency which is other than the local currency. So if we look at the Indian scenario, we are talking about those transactions which are carried out in currency other than INR. Any other type of fraud. Okay, so now this G point specifies that this list is not something which is exhaustive. So any other type of fraud will also be captured which was not getting captured under A to F. Okay. Now, in respect of these types of frauds, if there is a fraud which is in the nature of negligence and cash shortage and irregularities in foreign exchange transactions, that means D and F. That means in respect of D and F, these are to be reported as fraud if the intention to cheat or defraud is suspected or proved. So there means that these two types of frauds are the one which have to be reported if there is an intention to cheat. However, the following cases where the fraudulent intention is not proved, means in the given scenario, even if there is no fraudulent intention or it is not proved that there was a fraudulent intention, they will still be treated as fraud and reported accordingly. Cash shortages of more than 10,000 rupees and cash shortages of more than 5,000 rupees, if these are detected by the management, auditor, inspecting officer, and not reported on the occurrence by the persons handling cash. Now, what does it mean? It means that if there is a cash shortage of less than 5,000, okay, if there is a cash shortage of less than 5,000, this is not required to be reported as fraud if intention to cheat or defraud is suspected. Okay, only when the intention to cheat or the defraud is suspected or proved, only in that case, cash shortage of less than 5,000 will be considered as fraud. Otherwise not. Otherwise not. However, if the amount goes above 5,000, okay, if the amount goes above 5,000, then we will not be considering this criteria whether there was an intention to cheat or not. Okay, therein we will consider it as a fraud if it is detected by management, auditor, inspecting officer, if it ranges up to 10,000. If it ranges up to 10,000, means 5,000 to 10,000, if that gets detected without an intention to cheat, will be considered as fraud, provided it is detected by the management, auditor, inspecting officer, and it is not really reported by the person who was handling the cash. And then there's a third category, means if it crosses the level of 10,000, if it goes above 10,000, then this will be considered as a fraud. Even if there is no intention to cheat, even if this is detected by management, auditor, inspecting officer, no such criteria are required to be considered in this case. Okay. Clear on this? Yeah. This was only an exception of intention, of considering the intention to cheat, or you can say of considering these requirements or these additional criteria in respect of two types of frauds. Which one? Negligence and cash shortage and irregularities in foreign exchange transactions. For the other types of frauds, means category A, B, C, and E, means these one, A, B, C, E. Yeah, they will all be considered as fraud. They will all be considered as fraud, and therein we don't need to go by this intention. to go by checking whether there was an intention to cheat or not. Clear on this? Okay. Now, in case of NBFCs, which are having offices or branches, they should report all frauds perpetrated at such branches or offices to the RBI as per the prescribed format and procedures. So now we are talking about the NBFCs which may have multiple branches or multiple offices overseas. Okay, or you can say they have multiple branches, multiple offices in respect of their overseas offices, overseas branches. Any fraud, if that is perpetrated, that is also required to be reported to RBI, and there's a specified reporting requirement in such a case. Means there's a specified format and there's a specified procedure as to how that reporting has to be made to RBI. But all of those frauds have to be reported in respect of overseas branches. Yeah. All right. So we'll now move further onto the duties of an auditor. Now, this is another very important aspect, particularly from the audit side. So far, in relation to most of our discussion, we have focused on the compliances or the legal requirements, or you can say very simply the directions of the RBI which NBFCs are required to follow. And when we talked about most of those directions were not really the responsibility of the auditor. That was the responsibility of the management. See, auditor has that responsibility indirectly. Why? Because something which the management is required to do has to be checked by the auditor. So that means auditor has indirect responsibility to ensure compliances of most of the things that we have discussed so far. Okay. Why that is an indirect responsibility? Because only when the auditor will check, he will get to know whether all of these things are in place or not, whether there is non-compliance with any of those requirements and whether the non-compliance of such requirements will have an impact on the financial statements or not, on the basis of which true and fair view of the auditor may get impacted. Correct? Now we are looking at some of the legal requirements, or you can say some of the directions of the RBI, which specify duties of an auditor. Means now we are not talking about the duties of the management, the responsibilities of the management. No. Now we are talking about those aspects, those provisions which RBI requires auditors to take care. So let's understand all of those provisions. So what are the duties of an auditor? What are the duties of an auditor? First, compliance with the NBFC auditor's report. RBI directions have considerably increased responsibility of auditors. A very onerous task of reporting to the board of directors on certain specified matters and to the RBI on an exception basis has been imposed upon the auditor. So what do we understand? There are two duties. One, reporting to board of directors. Second, reporting to RBI. reporting to RBI is on an exception basis. We'll understand as to what do we mean by exception basis. Okay. And these two reporting requirements are in addition to the normal reporting requirements which are applicable to the auditor as per section 143 of the Companies Act. So there is another reporting to shareholders. Okay, this is something which comes as per section 143. Just give me 1 minute. Section 143. Okay, so now quickly looking at some of these requirements of section 143. We understand that the auditor is required to issue an audit report in case of any company, wherein the auditor will express his opinion whether the financial statements reflect a true and fair view. Yeah. This reporting is something which we say is the reporting under section 143. Okay. Now, like any other company, auditor will be required to issue an audit report to NBFC, wherein auditor will express his opinion about truth and fairness of the financial statements of NBFC. So that means this reporting continues to be applicable to this type of company, which is NBFC. Over and above this reporting requirement means over and above the auditor's report, 2 more reports are required. One, which is to the Board of Directors. Second, which is to the RBI. Okay, so that means we can understand that the responsibilities, duties of auditors have increased considerably in case of NBFC as compared to any other company. Clear on this? Yeah. So I think there are a few questions from which I missed in between. Okay, so Vidal, I'll come to your queries. I think these are in respect of some of the points we covered earlier. I'll come to both of your queries in some time. Huh? Okay. Now, auditor of NBFC which has accepted public deposits has to inquire whether or not the company has furnished to RBI statements, information in relation to all of those deposits which the NBFC has taken. Okay. If on an inquiry, the auditor is not satisfied about the compliance or about such compliance, then the auditor is required to report such matter to the RBI. Okay. Yeah. Now report to Board of Directors under the RBI directions as per the directions which are dated 29 September 2016 are the following. RBI has issued NBFC auditors report directions to auditor of every NBFC. So these are only the names of the directions. So I'm not really getting onto the names now. So let's now understand all of these reporting requirements one by one. Auditor shall make a separate report to the Board of Directors on the matters which are specified in para number 3 and 4 below. So now we are talking about this point number 2. Okay. So this was A. This was B. This was C. Now we are talking about reporting to board of directors. Auditor is required to include or make a separate report on the matters which are specified in para number 3 and 4 below while reporting to the board of directors. So let's understand point number 3 first of all. What is required to be included in the auditor's report to the board of directors? Auditor's report on the accounts of NBFC shall include a statement on the following matters. So let's understand what will be included in the statement. Statement means the auditor's report which will go to the board of directors. First, now this can become slightly complicated. So let's understand this. First means now we are talking about applicability of the matters required to be reported to the board of directors in case of any NBFC. Means auditor of any type of NBFC will have to include such matters in its report to the board of directors. Let's understand what are those matters. First, conducting NBFC activity without a valid certificate of registration granted by RBI is an offense, something that we have discussed many a times. Therefore, if the company is engaged in the business of NBFC and meeting the principal business criteria, what is the principal business criteria? Remember that 50-50 test means more than total assets are financial, more than 50% of total assets are financial assets, and more than 50% of total income is financial income. Okay. Auditor shall examine whether the company has obtained certificate of registration from the RBI or not. The moment the auditor will check the activities of the NBFC and finds that the NBFC has been carrying out the business of an NBFC, or the company has been carrying out the business of the NBFC, then what's the prerequisite? Certificate of registration. Auditor has to ensure that the NBFC has obtained certificate of registration from RBI. Okay, yeah. So that's the duty of the auditor. For any type of NBFC, this is something which the auditor will have to check. And this is the most important aspect. Why? Because for running any business, what's the first thing that we require? License. So if there's a company which is running the business without obtaining the license, what do you call it as? Illegal activity. Means the activity is not carried out as per the requirements of the law. Okay, number one. In case of a company holding the certificate of registration, which is issued by the RBI, whether the company is entitled to continue to hold such certificate of registration in terms of the principal business criteria. Okay. Third, whether the NBFC is meeting the required net on fund requirement. And what is the minimum net on fund requirement? 2 crore rupees. If you can just recap, this net on fund was nothing but the capital of the NBFC. In technical terms, we are calling it as net on fund. Otherwise, in simple terms, in layman's terms, what do you call it as? This is nothing but the net on fund. Sorry, nothing but the capital of the NBFC. So now, because this is also a prerequisite to commence the business, which is in the nature of NBFC, this net on fund has to be there. So that's why, what will the auditor check first? Whether certificate of registration is in place. If the certificate of registration is in place, whether the NBFC can continue the business, and for continuing the business or for commencing the business, what is the requirement? That the NBFC should have minimum net on fund available with itself. Okay. Every NBFC shall submit a certificate from its statutory auditor. Now, this is a responsibility on the part of the NBFC, but because it's required from the statutory auditor, so that's why this is also something which the statutory auditor needs to know. Every NBFC shall submit a certificate from its statutory auditor. Now, this certificate will not go out from any other person. This has to be taken from the statutory auditor, that it is engaged in the business of NBFC, requiring it to hold a certificate of registration, and it is also eligible to hold it. Okay. A certificate from the statutory auditor in this regard with reference to the position of company as at the financial year end may be submitted to the regional office of the Department of Non-Banking Supervision under whose jurisdiction NBFC is registered, means to the appropriate authority. So we don't need to get into so much technicality. We will just simply say to the appropriate authority, this certificate has to be submitted, which has to be done. So this certificate has to be submitted within 1 month from finalization of balance sheet. Okay, but it cannot be later than 30th December of that year. So what does it mean? If we are looking at 31st March 2022, okay, what is the date of finalization of the balance sheet? Within 1 month. So let's suppose it's 31st March. So it becomes 30th April 2022. Finalization of the balance sheet over here would mean audited financial statements. Okay, so if it's not 30th April, it can get delayed also. But in no case it will exceed 31st December 2020. In no case it will exceed 31st December 2020. Means this is the upper limit. Over this period it cannot go. Clear on this? Yeah. Now, let me just take you back to our discussion. Where did we start? We were talking about reporting on the part of the auditor to board of directors, wherein we discussed that whenever an auditor will report to the board of directors, he will report certain matters. Okay. So the first set of matters which the auditor will report to the board of directors was discussed while considering any type of NBFC. Means where any type of NBFC is there, what are the matters to be reported to board of directors? Therein we discussed. One is the certificate of registration. Second is to check about the compliance related to the net on fund. Something which is applicable to each and every type of NBFC. Okay. Now, continuing on the same requirement of reporting of auditor to the board of directors, And continuing on the matters which will be considered in that auditor's report to the board of directors, we will now be looking at NBFCs, or only those NBFCs which accept or hold public deposits. Means we are now looking at only those matters which will be applicable to this specified category of NBFCs. So let me just explain you. So what we can do is, I can just pick up one chart to help you understand this in a better manner. So we are saying reporting to board of directors by the auditor. We understood that he will consider certain matters, matters 3 and 4. He will consider matters 3 and 4. Okay. Now, in respect of matter number 3, first aspect is about those matters which the auditor will consider for any type of NBFC. Okay. Now we are looking at those matters which will not be considered for any type of NBFC, but only those NBFCs which accept or hold deposits. Means deposit taking NBFCs. Means these points which we are going to discuss now will be applicable to only those NBFCs which are deposit taking. Clear on this? So I'll keep updating this table as and when we discuss. Okay. So now we are talking about only those matters which will be applicable to deposit taking NBFCs. So it says, apart from the matters we discussed in point number A above. What was A? A was in respect of certificate of registration, net on fund, which will be applicable to all NBFCs, whether these are deposit taking or not. Means if we are looking at point number B, it doesn't mean that point number A will not be applicable. That will be there. Over and above, we will be discussing all of these points under B. Auditor shall include a statement on following matters in respect of deposit taking NBFCs. Let's understand what are the matters auditor will include. Whether the public deposits accepted by the company together with the other borrowings from public by issue of unsecured non-convertible debentures or bonds from its shareholders, and which are not excluded from the definition of public deposit in NBFC, acceptance of public deposit directions, are within the limits admissible to the company as per the directions. In very simple terms, we can say whether the deposits which are accepted by the NBFC are within the prescribed limits. Okay. Deposits are within prescribed limits. Number one. Number two, whether the public deposits held by the company, in excess of quantum of such deposits permissible to it are regularized in the manner provided in said directions. Now it says, if let's suppose deposits have been taken by the NBFC over and above the limit which was prescribed. Okay. Say for example, NBFC could take only 50 crore deposits, but the NBFC has taken 60 crore. Instead of 50, NBFC has taken 60 crore. In such a case, NBFC is required to regularize it. For regularization, there is a manner which is prescribed in the directions. What do you mean by directions? Directions means the requirements of the law. So this is something which the auditor will have to include in its matter to be reported. So if the limits have exceeded whether it got regularized. Okay, number 3, whether the NBFC is accepting public deposit without minimum investment grade credit rating from approved rating agency or not. Now, if you look at the directions of the RBI, NBFCs are required to take the deposits from the approved agencies, from the approved parties. It's not that they can go to any party. So whether they accepted public deposit, as per those requirements or not. Number 4, whether the capital adequacy ratio as disclosed in the return submitted to the bank. To the bank means RBI. Which bank is this? RBI. In terms of the directions has been correctly determined and whether such ratio is in compliance with minimum CRAR ratio. Every NBFC is required to maintain some capital adequacy ratio. Capital adequacy ratio means to ensure that the capital of the NBFC is at a particular level. And this is therefore considered to be adequate, and which the NBFC is also required to report to RBI. So whether the reporting to RBI which the NBFC's management has done was correct or not, whether that ratio was correctly determined or not. Okay. In respect of NBFC referred to in clause 3rd above. 3rd above means in respect of this rating agency criteria, whether the credit rating for each of the fixed deposit schemes that has been assigned by one of the credit rating agencies listed in NBFC directions is in force, and whether the aggregate amount of deposits outstanding at any point of time during the year has exceeded the limits specified by such credit rating agency. So here again we need to check whether that is within the prescribed limits or not. Next, whether the company has violated any restriction on acceptance of public deposits. Means there should not be any violation of restriction which is placed on acceptance of public deposits. If it is there, it needs to be reported to the board of directors. Next, whether the company has defaulted in paying to its depositors interest or the principal amount or both as and when they become due. Means auditor has to ensure that the deposits which have been taken are getting repaid on time with interest. Okay. Whether the NBFC has complied with Prudential norms on income recognition, accounting standards, asset classification, provisioning, and concentration of credits or investments. All of these aspects, which anyways we have discussed quite a lot. So this is something which will also form part of the reporting of the auditor to the board of directors. Whether the company has complied with liquid assets requirement as prescribed by the RBI, and whether the details of designated bank in which the approved securities are held is communicated to the office concerned of the RBI. Now, every NBFC is also required to maintain certain liquid assets. Yeah, to ensure its liquidity. Okay. Now, whether that has been complied with or not, something which we discussed in case of capital or in respect of capital adequacy. Similar, you can say it is in respect of adequacy of the liquid assets. Otherwise, the auditor needs to report this matter. Whether the NBFC has furnished to RBI within the stipulated period the return on deposits. So there's a specified format in respect of all of these deposits which the NBFC has availed to report to RBI. So there's a return which is required to be sent to RBI by the NBFC, which will contain details about the deposits which the NBFC has taken, whether that return has been submitted or not, and whether that return has been submitted on time or report. This is something which the auditor needs to report to the board of directors. Whether the company has furnished to the RBI within the stipulated period quarterly return on Prudential norms. Now, over and above some of these returns that we have discussed, our NBFC is also required to submit quarterly return on the Prudential norms. What are the Prudential norms? About income recognition, about asset classification, about provisioning, yeah, about the compliance of the accounting requirements as specified by the accounting standards. So on a quarterly basis, this reporting has to be made by NBFC to RBI. Okay. Now, whether these reports are getting furnished by NBFC to RBI or not is something which the auditor needs to report on. Whether in case of opening of new branches or offices to collect deposits, or in the case of closure of existing branches or offices, or in the case of appointment of agent, company has complied with the requirements contained in directions. So whenever NBFC will open a new office, close an existing office, or open a new branch, close an existing branch, there are certain procedures which NBFC needs to follow in respect of communicating to the RBI, or you can say it's more of about intimating to the RBI about opening new branches, opening new offices, or closing new branches or closing new offices. Yeah, there's again a specified procedure in respect of all of these things. Whether the NBFC has complied with those directions is again something which the auditor needs to report on. When the auditor will report to the board of directors, auditor will report on all of these matters. Okay, clear on this? So these were some of the matters that we discussed specifically in relation to deposit taking NBFCs. And let me just quickly do a recap of all of these requirements. As the terminology only suggests, we are talking about NBFCs which accept deposits. So that means there must be a lot of compliances which the NBFCs will be required to do in respect of accepting the deposits. So that's why some of the peculiar requirements of these categories of NBFCs will be specific to acceptance of deposits, which NBFCs are required to do and required to report to RBI. And this is something which auditor will check and ensure that this is getting done or not. If this is not done or if this is not done on time, auditor will report to the board of directors. Over and above that, there are certain points which are not specific to acceptance of deposits. For example, prudential norms. Prudential norms are something which will get applied to every type of NBFC. But still, because we are discussing this category of NBFC, so that's why we talked about some of the generic points also, like prudential norms. Yeah, like returns on prudential norms, like opening of branches, closing of branches, and requirements related to intimation of such matters to the RBI by the NBFCs. Okay. As an auditor, what do we need to check? We need to check that whatever the management was supposed to do has been done or not. And whatever was management was supposed to do has been done in a timely manner or not. So both of these aspects we need to cover as an auditor. We need to check, and if these are not done or if these are not done in an appropriate manner, then these are required to be reported by the auditor in his auditor's report. Clear on this? Yeah. So now, before I move on to the next set of matters which the auditors are required to report to the board of directors, I'll just come on to some of the queries which I think I missed. So Vidul was asking, so it seems that related party concept has no application in NBFC loan provisioning norms. I would say that there's no exception in relation to the related parties as regards any of the compliances which the NBFCs are required to follow. Exceptions in the sense that compliances are not in any way diluted because the customer or because of the borrower happens to be a related party for sure. Okay. Then the next query comes from Vidul only. Vidul says, report only if. So he's now talking about some of the frauds which were required to be reported. You remember there were certain categories of frauds which are required to be reported by the NBFC to the RBI. So he's saying report only if there was fraudulent intention is suspected. Report is 10,000 to be treated as fraud even if intention was not to cheat. Isn't it? Yes, that's true. So what's the idea behind this? They have taken a threshold of 10,000. In fact, that is 5,000. So something which is below 5,000, therein we need to assess whether there was intention to cheat or not. If there was no intention to cheat or intention to cheat is not proved, we will not be considering this as fraud. Otherwise, you can just consider the number of frauds or the kinds of frauds which will get reported, that all of these aspects related to shortages of cash or shortages of the bank balances, which could be about 1,000, 2,000 or up to 5,000 can be numerous. So that's why they have kept this threshold. Then Sairam is asking, sir, NBFC is required to file any annual returns to NBFC? Yes, of course. See, NBFC is first of all a company. Yes or no? Yeah. Like any other company, NBFC is also a company. Company which is registered with the ROC, Registrar of Companies. That's why all the compliances which any other company will be required to do in respect of something which the Companies Act requires will also be required to be done by NBFC. And that's why we have been discussing about these aspects of regulations which are voluminous as well as stringent in case of NBFCs. Okay, so like any other company, NBFC will also be doing the reporting or compliances of the Companies Act. Some of these reporting requirements, some of these compliances that we have been discussing, which comes as per RBI or as per the directions of RBI, are over and above all of those, because that is something which we consider for a company in the normal course of business. That is not something which is peculiar to an NBFC. Understood? Yeah. All right. So I think we are done with your questions now. Any more questions in case you have, you can just put across your queries. And what we can do is now, before we move further, I think we can take a break now. And after the break, we will continue with our discussion on this. Okay. Yes, sir. All right. Okay. Hi, welcome back. So we can now continue with our discussion. So we discussed about the reporting requirements to the board of directors. One was in case of any NBFC. Second was in case of deposit taking NBFC. Now the third category. Let's suppose if the NBFC is not the one which is accepting public deposits. Yeah. In such a case, what will be the reporting requirements on the part of the auditor? Let's understand this third aspect now. If the NBFC is the one which is not accepting public deposits, there again, the reporting requirements which we discussed for any NBFC means for certificate of registration, for maintaining the minimum net on fund or to have minimum net on fund to commence the business. Those requirements will become applicable to this type of NBFC also? Yes or no? That will become applicable to this type of NBFC also? However, the requirements that we discussed in point B was the one which was applicable to deposit accepting NBFCs, deposit taking NBFCs. Those requirements will not be applicable to non-deposit taking NBFCs. Correct? Yeah. So let's understand what will be the reporting requirements for the NBFCs which do not accept public deposits. All right. So now, first, whether the board of directors has passed a resolution for non-acceptance of any public deposits. This is something which will set the base for us to assess as an auditor whether the NBFC is accepting the public deposits or not. Because if this is an NBFC which is not accepting the public deposits, then internally the management may have some documents which could be in the form of board of directors or the resolution of the board, through which they have specified that they will not be accepting any public deposits. Yeah. Whether the company has accepted any public deposits. Now, even though the NBFC is the one which is not accepting public deposits, but despite that, it may happen that the NBFC has accepted some public deposits, which could be a violation. Violation because this company was not supposed to accept the public deposits, but despite the fact that this was something which was non-deposit taking NBFCs, it had taken deposits. Next, whether the company has complied with Prudential norms. Now, Prudential norms is something which will become applicable to any NBFC. Prudential norms in relation to income recognition, asset classification, provisioning requirements, all of those aspects will be applicable to this category of NBFC also. Yeah, this cannot be ignored. So that's why this will have to be evaluated for this category of NBFCs also. And if not, if there is a non-compliance on any of these points, then the auditor will have to report this. In respect of systemically important non-deposit taking NBFCs, whether the capital adequacy ratio as disclosed in the return submitted to RBI has been correctly arrived at. and whether such ratio was as per the applicability criteria. So next point is again about the capital adequacy ratio. Something similar to what we saw in case of deposit taking NBFCs. Here again, the NBFCs which do not accept public deposits are required to maintain a minimum capital and are also required to report the same to the RBI. So auditor needs to ensure that the reporting which has gone to the RBI by the NBFC is correct, wherein auditor needs to check whether the ratio which was computed, whether the details which were furnished in the return to the RBI were correct or not, and whether that return was furnished to the RBI in a timely manner or not. Next, whether the NBFC has been correctly classified as NBFC microfinance institution. If this is the one which becomes microfinance institution as per the directions of RBI. Okay, clear? Next, in case of a company which is engaged in the business of NBFC, which is not required to hold certificate of registration subject to certain conditions. Now let me just take you back to that chart. As we discussed, we had to update this chart. Now the next auditor reporting criteria which we discussed was about NBFCs which do not accept deposits. Okay. And then the fourth category. Now for matters 3 and 4, we discussed we are required to assess auditors' reporting requirements for various types of NBFCs. Fourth is the one wherein the NBFC is not required to have certificate of registration. In certain exceptional cases, if the NBFC is not required to have that, approval from RBI. Correct? So let's understand what are the reporting requirements. In such a case, means in this fourth category, in this category, old certificate of registration, auditor shall include a statement that the company is complying with the conditions stipulated as advised by the RBI. See, if the RBI will give the approval that it's okay for the NBFC not to have certificate of registration, then definitely RBI will require compliance with certain conditions. Means this approval from the RBI will definitely be subject to certain conditions. There must be some stipulations. Auditor needs to ensure that any such NBFC is compliant with such conditions. Okay, clear? Clear on this? Okay. So now let me just take you back. So we started discussing the matters which are required to be reported by the auditor to the board of directors. And those matters were required to be discussed in the form of two categories. Those are covered in para 3 and para 4. Now for para 3, we discussed that requirements of para 3 will be based on the type of NBFC it is. Let's understand what are the requirements of para 4. Means what are these other requirements? Where in the auditor's report statement regarding any of the items which we have covered so far in para 3 is unfavorable, or if the report is qualified, auditor's report shall also state the reasons for such unfavorable or qualified statement. Where the auditor is unable to express an opinion, his report shall indicate such fact. Means whenever the auditor is giving unfavorable statement, qualified statement, it has to have a reason for the same. Means there has to be a reason for the same. For the qualified statement, for the unfavorable statement, and in case auditor believes that he will not be able to express an opinion, for whatever is the reason, auditor needs to give the reason for the same. Auditor just can't simply include the matter, make it unfavorable, or maybe draft it as if it's unfavorable, or may qualify his report without the reason. It's not something which is acceptable. So auditor has to include a reason for the same. Clear? Okay. Now we are moving on to the next set of audit reporting requirements on the part of the auditor, which is not to the board of directors, which is to the RBI. Which is to the RBI. Now we are discussing about the reporting requirements to the RBI. If we'll just go back, we discussed that there are 3 reporting requirements broadly on the part of the auditor. 1, to issue audit report as per section 143. Remember? Second, reporting requirement to board of directors, for which we discussed various points. And now the third one, the reporting requirement to RBI. We are not talking about reporting requirement by NBFC to RBI. No. We are talking about reporting requirement by the auditor to RBI, wherein we also read that this report on the part of the auditor to the RBI will be an exception report. Let's understand what do you mean by an exception report. Okay, so it's an exception report which the auditor is required to give to the RBI. So let's understand this. Where in case of an NBFC, statement regarding any of the items which we have discussed in para 3 above is unfavorable, qualified, or in the opinion of the auditor of the company has not complied with provisions of RBI Act, NBFC public deposit directions, or the master directions of the RBI, it shall be the obligation to make a report containing the details. Auditor has to report. Let's see, what's the report? Details of such unfavorable or qualified statements, or about such non-compliances in respect of the company, that means the NBFC, to the concerned appropriate authority for the reporting to the RBI. The duty of the auditor shall be to report only the contraventions of provisions of RBI. Okay, so auditor will report only the contraventions. means only the non-compliances are required to be reported. And such report shall not contain any statement with respect to compliance. Means it's not a checklist which the auditor is required to report to RBI. Checklist in the sense, say an NBFC was required to comply with 70 points. So auditor will not say, okay, point number 1 to 10 are complied with, point number 11 is not complied with. Then again he goes on and just do a ticking of this has been complied and this has not been complied. No. So whatever is complied with is not required to be reported. Only the non-compliances, only the unfavorable statement, qualified statements have to go to the RBI by the auditor. Means if there is anything which the auditor has not reported to the RBI will be considered as if that has been complied with and that is not unfavorable on the part of the auditor. Okay, this is something which we call as exception report. Means only the exceptions which are nothing but the contraventions or the non-compliances are required to be reported to RBI by the auditor. So you can say exceptions are limited to non-compliances. Sorry. Or you can say the contraventions. Non-compliances or only the contraventions on the part of the auditor. Okay, yeah. So now, so far, all these reporting requirements that we have discussed were in relation to various reports which the auditor will issue. And as we discussed, there were three broad categories. One which goes out to the shareholders, second which goes out to the board of directors, and third which goes to the RBI. Correct? Yeah? Okay. Now, we are in a way coming back to the first type of report now. First type of the report which goes to the shareholders, wherein the auditor will express an opinion on the financial statements of the NBFC and something which is applicable to every company. Yeah? Yes or no? Something which is applicable to every company. For every company, auditor does this reporting. Now, as part of that reporting under section 143, for certain categories of companies, an additional report is also required to be given. Now, I'm not talking about NBFC, I'm talking about any other company. Yeah? So, there are certain categories of companies which are also required or wherein the auditor is also required to report on certain specified matters. And such report is very popularly called as CARO. Yeah, Companies Auditors Report Order, which has got changed significantly. Yeah? And there's a revision in this CARO. So now we have CARO 2020 in place. So now we will discuss about some of those reporting requirements which are in relation to an NBFC, or you can say which are specific to an NBFC and which will also form part of the reporting requirement on the part of the auditor. Okay, yeah. So let's understand what are those peculiarities which are specific to the NBFCs in relation to CARO. First matter. The auditor is required to report that whether during the year company has made investments in, provided any guarantee, means it's the reporting about investments, about any guarantees which are given or securities which are given or granted any loans or advances. Means something which is the core business of the NBFC, or granted any loan or advance, whether that is secured or unsecured, to companies, firms, LLPs, or any other parties. And please remember that when we talk about CARO 2020, it's not an exception report. This is more of a checklist, or you can say something which is in the form of a checklist, wherein for each and every point which is specified in CARO, auditor is required to comment upon, irrespective of whether the compliance was there on the part of the company in respect of that point or not. Auditor is required to specifically comment upon each and every point. Okay, so that means now for this type of matter, wherein the company would have given any security, company would have provided any guarantee, company would have invested in any in any of the investments, or the NBFC has given any loan or advance, auditor is required to check and comment upon whether it was done during the year or not. And where the investments were made, guarantees were provided, securities were given, the terms and conditions of the grant of such loans and advances are not prejudicial to the company's interest. Now, what is it that the auditor will check? Whether such investments, okay, or whether such monies which were given, whether such securities which were given are prejudicial to the company's interest or not. They should not be prejudicial to the company's interest. Okay. Next, in respect of loans and advances, there should be a schedule of repayment, and payment of interest should be stipulated. And auditor needs to check whether the repayments or the receipts are regular or not. If you remember the example that we discussed when we started today's session, we discussed that there was an NBFC which had given loans and advances to its related parties, wherein there was no schedule of repayment. There was no schedule of repayment of principal or interest. Now, what do we do with those types of situations? Those will get captured over here. That is a non-compliance of the RBI's directions. So if there is non-compliance of the RBI's directions, whether that matter will get reported to the board of directors? Yes. Whether that matter will get reported to the RBI? Yes. Other than that, because it's a specific reporting, so that's why such matter will also get reported under CARO. That there's no schedule of repayment. There's no schedule of repayment of principal or interest, or both. Okay. Next, if the amount is overdue, state the amount overdue for more than 90 days. If the amount is overdue for more than 90 days, we need to state that as an auditor. And we also need to check as to what reasonable steps have been taken by the management of the NBFC for recovery of such amounts. Okay. Whether the NBFC has granted any loans or advances which are repayable on demand or without specifying any terms or period of repayment. If so, specify the aggregate amount, principal thereof to the total loans granted, aggregate amount of loans granted to promoters, related parties, as defined under the Companies Act. So now as you will see, that specific example we discussed in today's session has a specific reporting requirement under CARO. So first of all, under this point number C, what do we report as an auditor in respect of that matter? That there is no schedule of repayment, there is no schedule of payment of interest. Okay. Secondly, because the terms are missing, and if the management says it's something which is repayment on demand, and the terms are vague, so what do? All such loans with their amount are required to be reported in CARO. Their percentage in proportion to the total loans granted is required to be reported in the CARO. Aggregate amount of loans which are granted to promoters, if any, those are also required to be reported in the CARO. Loans which are given to the related parties are also required to be reported specifically over here. Means there will be a listing of all such types of loans and a percentage thereof to the total loans which are granted. Yeah. So now for checking this, what is it that the auditor will do? Very simply, auditor will first of all take the listing of all such loans advances. Out of the loans advances, auditor can very easily categorize that into two parts. The one which have been given in the normal course of business at the market rate of interest. Yeah, because if these are not really at the market rate of interest, can we say these are not prejudicial to the company's interest? The answer is no. And for all the loans which are given, auditor will also have to specify the categories of borrowers. Means out of the borrowers, who all are the promoters, if any, who all are the related parties, if any, and of course the remaining parties which are the unrelated parties. Then the auditor also needs to check in case some of these loans or advances which have been given, which have not been classified as NPA, whether those are overdue for more than 90 days or not. Remember the criteria for NPAs? Criteria for NPAs, as we discussed in certain cases, it started with a period of 6 months. Remember? Yeah. In certain cases, for certain loans and advances to be classified as NPAs, the overdue period criteria was 180 days. So that means we may have a situation wherein we may have some advances which are given to the parties and which are overdue for more than 90 days, but those are not NPAs as of now. So such types of cases are required to be assessed by the auditor. Okay. And because these are overdue means something which has crossed the due date. Something which has crossed the due date. Let's suppose due date was 30 days. And after due date, it's not getting recovered. So it's a concern for the management. Definitely the management may have created a provision for this. There's no doubt. But still, management needs to make efforts for the recovery of such amount along with the interest on that amount. And auditor needs to check as to what all efforts have been taken by the management, what all steps have been taken. So how will the auditor check it? Auditor will check all of these things on the basis of communications between the NBFC and the respective customer. Okay. Next aspect which needs to be checked by the auditor is about the income computation, is about the computation of interest. Now all of these EMIs which the customers are required to pay will have two components, principal and interest. And these AMIs which the NBFCs are required to collect, they must be having some computations for the same. These days, as we understand that all of these things are IT based. Yeah, so that's why the reports will be available to the auditor easily in respect of all of these points. So auditor needs to check whether all of these computations are appropriate or not. So to check each and every computation of each and every type of MEMI is not possible. This can of course be checked by the auditor on a test check basis. Clear? Clear? Yeah? All right. So this was about the reporting on the part of the auditor in relation to CARO. In relation to CARO. Now moving on to the next point, where the company is required to be registered under section 45 IA of the RBI Act, and if so, whether the registration has been obtained. Means under CARO, once again, what do we check? The same thing. And this happens to be the most important criteria. That is about the certificate of registration. This is nothing but the certificate of registration, isn't it? Yeah, this is nothing but the certificate of registration. So first of all, auditor will have to check whether the company, whether the NBFC is required to be registered. If so, if it is required, whether the registration has been obtained or not. Why? Because if this is not obtained, that means the NBFC is running the business without taking the license, which is a non-compliance of law. Yeah. Continuing on this point, whether the company has conducted any NBFC or housing finance activities without a valid certificate of registration from the RBI. Just give me 1 minute. Sorry. Whether the company has conducted any non-banking financial or housing financing activity without a valid certificate of registration from the RBI. Now, if this is done, what will happen? That will be considered to be an illegal activity. Yeah. So that's why auditor will check whether the NBFC was required to get registered or not. If yes, whether the auditor has taken the registration certificate or not. And if the auditor has not taken the registration certificate, if the NBFC is not registered, then whether the NBFC has started the activities of NBFC, whether the NBFC has commenced the activities of NBFC, which should not have been done. Which should not have been done by the NBFC. Okay, next. Whether the company is a core investment company as defined by the RBI. If so, whether it continues to fulfill the criteria of core investment company, and in case company is an exempted or unregistered core investment company, whether it continues to fulfill such criteria. Whether the group has more than one core investment company as part of the group. If yes, indicate the number of core investment companies which are part of the group. Now, core investment company is again a type of NBFC. And this type of NBFC is again defined by the RBI directions. So RBI's directions define as to which type of NBFC will be considered as core investment company. Something similar to, if you remember, which we discussed about microfinance institution or some other types of NBFCs. Now, here again, what is required to be assessed? Here again, the requirement is to assess about the nature of the activities. So basically, we are at the starting point right now. as far as audit is concerned. And at the start, we need to check whether the requirements of starting the activities, doing the activities of an NBFC, of doing the activities by an NBFC have been commenced or not, and if those have been commenced, if those have been carried out, whether the certificate of registration was in place or not. And if at all we get into a situation wherein we find that any of these registration requirements were not met, it means the required registrations were not obtained, then definitely it's a non-compliance, which is a very big non-compliance on the part of the NBFC, which needs to be regularized immediately by the NBFC. But auditor needs to ensure that this is reported to the appropriate authorities. So this is not something which will be reported in CARO. This is also something which will get to the board of directors, which will also get reported to the RBI. Clear? Clear on this aspect? Yeah. So in relation to CARO, there were these specific aspects that we were required to cover. Yeah, so I think we can pick up an example also on some part that we have discussed so far. So let me just take you to an example now. All right, so let's take an example of an NBFC. So this NBFC is non-deposit taking NBFC. Okay. This is non-deposit taking NBFC. And let me just tell you, the moment we say these are non-deposit taking NBFC, it means that these NBFCs have not taken public deposits. Means to a certain extent, public interest is reduced in such type of NBFCs. Okay, to a certain extent. Now, in respect of this type of NBFC, we understand that the total advances which they have as at the balance sheet date, total advances which they have are rupees, say, 100 crore. This is the total size of advances which they have. Okay. Out of these total advances of rupees 100 crore, let's understand its breakup. Rupees 60 crore is given to a single party, which is a related party. Here again I am bringing a related party. This is given to a related party. To a single party, okay? There are not many parties, only a single party is there. Then rupees 30 crore given to various unrelated parties. Yeah, these are given to various unrelated parties. And rupees 10 crore was given to promoters. These loans have been given to promoters. Okay. Now, let us understand the situation of the financial year 21-22, which was impacted due to Corona or due to lockdown. Okay. Now, for a period of time, there was a lockdown, and during which the activities of NBFC were on a standstill. Nothing much was carried out during this period. And that's why what happened? NBFC did not charge interest from all of these parties. It did not charge interest. Okay, from all of these parties. No interest was charged during this period. Let's suppose this was 2 months. I'm assuming this. Don't go by the actual numbers. Don't think, sir, when was there Corona for 2 months? Let's assume. Say for 2 months, no interest was charged during the year. Okay. And let's suppose these 2 months were April and May. For April and May, no interest was charged from any of these parties. Yeah. After April and May, that means for the remaining part of the year. That means for the remaining part of the year, interest was charged from all these parties. But from unrelated parties, if you look at the unrelated parties, and if you look at the promoters, if you look at these two parties, interest charged for remaining 10 months, covered interest for 2 months. Okay. Interest which was charged from these two categories of customers, it covered the interest for these 2 months also. But from the related party, there was only one related party. From this related party, interest was charged only for 10 months. Okay, yeah, only for 10 months. Now, this NBFC had taken borrowings from various banks. It had taken borrowings from various banks. This NBFC had taken borrowings from various banks. Now, if you look at the borrowings which this NBFC had taken, just give me 1 minute. If you look at the borrowings which were taken by this NBFC from the banks, the rate of interest was, say, 8.5% per annum. Okay, this rate of interest was 8.5% per annum. And if you look at the effective interest rate, now why am I calling this as effective interest rate? Because during the year, for 2 months, no interest has been charged from the related party. Okay, yeah, so I'm just computing the effective interest rate for the year by including this period during which no interest was charged and by including the period for which interest was charged. So this effective interest rate comes out to say 7.5% for the related party and 8.25% for the promoter group and 9% for the unrelated parties. So this is how this percentage stands. Okay, clear on this? So these are the effective interest rates, we can say, which have been charged. Effective interest rates which have been charged. All right, clear on the recovery pattern? Now, as far as recovery pattern was concerned, we could see that 2 months was a period which was a kind of relief available to all of its customers, and that's why nothing was recovered from them. But eventually, NBFC started recovering monies, installments from all of its customers, and those were all regular and timely paid, and those were paid in a timely manner. Now, during the year or during this year, when you audited the financial statements of the company or this NBFC, this is something which you analyzed, and this is broadly the numbers as to how do they stand in front of you. Now, considering that situation, do you think there's anything for you to report on, or which is a kind of concern for the NBFC to fix up in relation to its financial statements, on relation to its provisioning requirements, in relation to any of the prudential norms, or in relation to any of the regulations of the RBI, whether it is about the RBI's directions or any other compliance which the NBFC should have taken care of? Yeah, so that is something which you need to analyze as an auditor. Yeah, so I can give you some options for this. You can also just start thinking about some of the non-compliances which possibly might have happened, but I can also give you some options over here. So option number 1. As far as this NBFC is concerned, there is no non-compliance. There is no non-compliance. Why? Because during the corona period, it was a relief which was available to its customers, and after that, customers have been paying on time, and they have been regular, and they have been paying what the NBFC has been asking for. So that means there is no non-compliance. Everything seems to be in line, and that's why there is nothing for the NBFC to report on or the auditor to report in respect of NBFC. Option number A. Option number B. Option number B says that in respect of related parties, the interest which has not been charged for 2 months is a matter of concern. which should be reported. Which should be reported. Why? Because this is something which should have been recovered by the NBFC, but this should be reported. Okay. Option number C. In relation to related parties and the promoters. In relation to related parties and the promoters, we need to assess that the loans which have been given and the interest which is getting recovered, that should not be prejudicial to the interest of the NBFC, which doesn't seem to be happening in this case. Why? Because if you look at the pattern, if you look at this pattern, what do you find? NBFC has charged interest at a rate which is below the rate at which NBFC is paying to its lenders. Yes or no? Yeah. So that seems to be a matter of concern. NBFC has been paying at a rate which is below the rate, which is being paid by NBFC to its lenders. So can this recovery on the part of the NBFC be considered as not something which is prejudicial? The answer is no. So that's why this is something which is a non-compliance. So that's why it should be reported under CARO. This will get reported under CARO. This will also get reported to the Board of Directors. And this will also get reported to the RBI. Yeah? Clear? Okay. Then we may have one more option. Option number D. Let's understand option number D. See, as far as this NBFC is concerned, what do we need to look at? We need to look at the overall picture. We need to look at the overall recovery. Overall recovery in terms of what is required to be charged and what is being charged. Yeah. So if you look at the overall recovery, currently what do we find? Currently we find that for two categories of customers, rate of interest is below the rate at which it should have been charged. Okay. But if you collect all of these advances, if you bring together all of these advances and you check whether the amount which the NBFC has earned in the form of interest from all of these advances throughout the year, whether that is below the rate at which NBFC has paid or not, then what do you find? It's not the case. And again, please don't go into the mathematics, arithmetical accuracy. I'm just taking the approximation over here. Don't just simply think that, oh, sir, if you compute this will not come out to be higher than 8.5 or equivalent to 8.5. This is only an approximation for the purposes of our discussion, I'm saying. So I'm saying at the total level, okay, at aggregate level, what do you find? Rate charged is equal to rate paid, and hence because of this reason there is no problem. So we are saying that because of this reason, things are in line. Because of this reason, there is no problem. As far as NBFC is concerned. Okay. So now let's try to assess all of this situation, all of these options one by one, and let's try to understand as to which option should be considered the most appropriate one. See, to say that there is no non-compliance at all in the NBFC means to go by option number one. That will be inappropriate. Why? Because there is no doubt a non-compliance has taken place. You have to give this a clean chit will not be the right option. Correct? When you go to option number D and you check the compliances at the aggregate level, that will also not be appropriate. Why? Because a company is not allowed to carry out non-compliances in certain cases and then cover it up, saying that on an overall basis there was no non-compliance. So is it possible that a company is doing non-compliance for two parties when the company is having 2 lakh parties, and then to give a justification that only in case of 2 parties I have done the non-compliance out of 2 lakhs cases, so that's why I'm okay with this? Will it be appropriate to say that? The answer is no. So that means non-compliance cannot be tolerated even for limited number of parties. Okay, so there again, we cannot say that option number D will be the right option. So option number A and D go away. Now, moving on to option number B. Option number B says that in respect of related parties, 2 months interest has not been charged. And this is something which should get reported. There's no doubt this was a problem which should have been reported. But even if you look at these 2 months reports, these 2 months interest, the problem in respect of related parties is not limited to only these 2 months. Problem is with respect to the overall interest which should have been charged and which has not been charged for the year. Yeah. And which cannot be ignored. So that's why by considering option number B, we are only looking at the limited picture. We are ignoring the larger picture, which is something which has been captured by option number C. Option number C says that for the related parties, for the promoters, the interest charge should have been higher. Just give me 1 minute on this. I'm formatting now. Just 1 minute. Interest charge should have been higher. And at least the interest should have been charged at a level slightly higher or maybe higher than what the company was paying. Because what is the overall objective of the NBFC? To earn money. If the NBFC has been paying at 8.5 and charging from its customers lower than 8.5, can it be considered to be the favorable to the business of the NBFC? The answer is no. So that's why it's a non-compliance which needs to be reported and the most appropriate option. This reporting has to be made by the NBFC, and the auditor will also be required to report this matter in his reports. Clear on this? Clear on this point? Any questions, any doubts in case you have on this? You may just put across your queries. So I'll now move further. Okay, moving on to the assessment of Ind AS, as we understand that Ind AS is something which is applicable to most of the companies now. And this is also something which becomes applicable to the NBFCs. And for NBFCs, there's something which has started from financial year 18-19. So that was the first year when it became applicable, and wherein the criteria which we consider for applicability of Ind AS to non-NBFCs is the same. So what's the criteria which we consider? Net worth criteria. So we'll go by the net worth of the previous financial year. Means for 18-19, if this was to be assessed, we'll check the net worth of 17-18. And if the net worth of the NBFC is more than 500 crore or 500 crore, then it becomes applicable to NBFC from the very next year. And over and above this criteria of net worth, what do we check? If there is a subsidiary, associate, joint venture, holding company of NBFC, any of these associate companies, or you can say any of these group companies, will also get covered under Ind AS if the NBFC gets covered under Ind AS. Okay, clear? Yeah. Now, the second phase. So the first phase that we talk about is in respect of NBFCs getting covered under Ind AS from 18-19. Now those NBFCs who got left out, who didn't get covered under Ind AS in 18-19, will have to then evaluate whether they will get covered under Ind AS from the next year. But from the next year, the net worth criteria will not be 500 crore or more. It goes down. It becomes 250 crore or more. Or in case the NBFC is listed, because in case the NBFC is listed and it didn't get covered under the phase 1, then irrespective of its net worth, even if its net worth is negative, it will get covered under Ind AS from the second year. And which year is this? 2019-20. And here again, any such NBFC which gets covered under Ind AS will have to check whether it has got holding, subsidiary, joint venture, associate. Any of these group companies of NBFC will also get covered under Ind AS. They will also get covered under Ind AS. Clear? Clear on this? This was about the applicability of Ind AS on the financial statements of NBFC. As we stand today, both these years of applicability of Ind AS are already gone. That was in respect of NBFCs which have been in place before these periods, or which had their net worth crossing 250 crore or say crossing 500 crore, or which were listed as on those dates or during those periods. Now, currently, we can see that most of the NBFCs which are large size, they are already on Ind AS. But some of the NBFCs which were not so large sized and which will now have the net worth of more than 250 crore will have their applicability of Ind AS starting from the very next financial year. Okay, yeah. Now, for the purposes of Ind AS, there is a separate format of preparation of the financial statements. One is, of course, driven by the accounting standards, that means Ind AS, wherein each and every requirement of Ind AS will have to be taken care of by the NBFC. But over and above that, Schedule 3 specifies a format for the preparation of financial statements of NBFC. So when you look at Schedule 3 again has got 2-3 parts. Division 1 deals with the format for companies which are on Indian. Division 2 deals with the format for Ind AS financial statements of those companies which are not NBFC. And Division 3 is the one which prescribes the format for financial statements of NBFCs which are on Ind AS. Okay, so we can look at the illustrative format. We can look at the illustrative format of the financial statements of NBFCs as per Schedule 3. Yeah. So let's look at the illustrative format. So as you will see, we start with the financial assets, which is the most significant chunk, which is the most important part in case of any NBFC, which will start with cash and cash equivalents, then we'll have bank balances, then we'll have derivative financial instruments, then we'll have receivables, trade receivables, other receivables, then we'll have loans, investments, and other financial assets, if any. I think one of the points that you would have observed over here is there is a difference between the format of financial statement of NBFC when you compare it to a company which is not an NBFC. Yeah, because you would have dealt with financial statements of so many companies which are not NBFCs. Yeah, I'm sure you must have looked at the financial statements of those companies. And one striking difference between the financial statement of non-NBFC and NBFC is the pattern in which, is the order in which assets and liabilities are required to be reported. If you will observe this pattern, you will find that for an NBFC, the way these assets are reported, they are in the order of their liquidity. Yes or no? They are in the order of their liquidity. The most liquid asset is coming first, then the second most liquid asset, then the third most liquid asset. Yes or no? But this is not something you will find in case of non-NBFC. Correct? Yeah. So the most liquid assets are coming first. So order of liquidity is required to be followed necessarily for reporting the assets and liabilities of NBFC. Correct? Yeah. Then we have non-financial assets, wherein we have inventories, current tax assets, deferred tax assets, investment property, and this whole list is available. Okay. Moving on to the liabilities. So the first one, derivative financial instruments. Then we have payables, trade payables, and the other payables. Then we have debt securities. Then we have borrowings, deposits, subordinated liabilities, other financial liabilities. Here again, what do you find? Order of liquidity. And here again, this is the most striking difference. The way liabilities of NBFC are reported and the way liabilities of non-NBFC are reported there's a difference. Yeah. And the most striking difference is the order of liquidity in which they are reported. Clear on this? Yeah. All right. Then of course we have non-financial liabilities, provision, deferred tax liabilities, non-financial liabilities, equity, and this other reserves, or you can say the reserves and surpluses, are required to be reported. Then moving on to the P&L. Now P&L is not something which will have the order of liquidity, because this is about the profit or loss which has been generated during the year. Now in respect of the P&L, what do you find? Of course, the revenues of the NBFC. And what do we have in the revenues of the NBFC? It's the interest income from the financial assets, dividend income from the investments. Yeah, these two are the most important, most significant items on the P&L of an NBFC, because these are the numbers which arise from their core assets, or you can say the most important, most significant assets. And then of course we'll have various line items which could be about sale of services, net gain on fair value changes, rental income, and etc. other items. As far as expenses are concerned, the most significant item on the financial statement of NBFC will be the finance cost. Why? Because the funds which the NBFC will have, whether it's about the borrowings or any other funds which the NBFC will have, NBFC will have to pay interest on that. NBFC will have to pay charge on that. And that's why, unlike any other company, this is going to be the most significant item as far as expenses are concerned in the P&L of an NBFC. And after that, you'll see most of the items which are similar, but those are not very, very significant in case of an NBFC. Clear? Then of course we have payroll, depreciation, other expenses. The way the P&L is required to be reported is exactly the same, except the fact that because of the nature of activities is different. That's why we don't really have sale of products or sale of services coming at the top, or you can say cost of goods sold or change in inventory. Something like those nature of activities are not available. So that's why some of those nature of expenses you will not see in the P&L of an NBFC. Clear? OCI again, because this will be based on Ind AS, so that's why we'll also have OCI items, and then of course the total comprehensive income. And all of those schedules, etc., will also form part of financial statements of an NBFC. So we are not really looking at the complete set of financial statements. We are just looking at the balance sheet, P&L, and as to how these are presented in the case of an NBFC, just to give you a perspective, because once you go through the financial statements, once you get a feeler of the financial statements, you also understand as to the nature of the activities, and that's how we as an auditor are able to structure our audit procedures, design our audit procedures in relation to the audit of financial statements of an NBFC. Clear? Yeah. So this is all about NBFCs that we had to discuss. And just quickly doing a recap of NBFCs, I would say that in relation to the NBFC, the most important aspect as an auditor, every time we have to check is about the nature of the business, nature of the activities, and to assess, irrespective of the fact whether the company is registered as NBFC or not, whether the principal business of the company is that of NBFC or not. If yes, then to check whether the NBFC is registered as required and the NBFC is making sure of all the prerequisites, means in the form of having the minimum net worth funds or not. Then as we discussed, there are a lot of prudential norms, there are a lot of regulations to which the NBFCs are subject to, which are over and above which any other company will be subject to, and that is something we as an auditor need to be knowledgeable of. Only then we'll be able to apply our audit procedures and to ensure that all of those compliances are there in place or not. Yeah. So, all right. So with this, I think we come to a conclusion to our session, and you don't really have any questions as of now. This is what I can understand. But if you come across any question while you study, while you just go through this, just feel free to reach out to us with your queries and questions, and we'll be happy to get back to you. So thanks to all of you. Thanks everyone for your time and for your wonderful participation. Thanks so much.